For many first-time traders, the Forex market can seem confusing. So, what exactly is Forex? Forex refers to the FX or foreign exchange market, and it's the place where you can trade currencies from all over the world. When you trade Forex, you buy one currency and sell another. You always buy and sell at the same time, which is why currencies are always quoted in pairs. Various factors such as economics and geopolitics mean that exchange rates fluctuate, so currencies rise and fall against each other. By forecasting the direction currencies are likely to take, you have the opportunity to make profit. So, you might decide to buy the euro and sell the US dollar, anticipating that the euro will rise versus the dollar. You buy a number of units of euros for your dollars, and your forecast proves correct, and the euro does rise. So you close your trade and make a profit. Remember though, if you are wrong and the euro falls against the dollar, you will lose money. Forex trading is full of opportunities. It is the largest and most liquid market in the world, trading over $5 trillion every day. This high liquidity makes it easy to buy and sell currencies. Forex is also a global market. It starts after 6 a.m. Sydney time and ends 5 p.m. Friday in New York, meaning you can trade 24 hours a day, 5 days a week. And because the Forex market is influenced easily by world economic and geopolitical events, this volatility creates lots of short-term trading opportunities.